Hello, everyone. My name is Phil. I have spoken to most of you, and I'm one of the business relations officer of Chicago DealVault and the Dealmakers team. Hugo will be joining us a bit late today, so welcome to today's webinar. It's about real estate insurance, important endorsements, roof replacement costs, etc. So may I have the honor to introduce to you our guest speaker. He is a local agent with the Liberty Mutual Insurance in their Deerfield office. And he and his team services a variety of clients ranging from renters to single family homeowners, all the way up to investors and multifamily homeowners, as well as a multitude of different auto insurance and the liability products. So they write through 11 different auto and home insurance carriers that are all A-related or better. So friends, let's give a hand, and I'm giving the show floor to Colin. Hi, Colin.
Hey, how are you doing?
I'm
And thank
good.
you
Thank
for
you
the
so much.
introduction. Yeah. Um, yeah, so I'm really happy to be a part of you guys this afternoon. I was working with Hugo on a couple of scenarios and um, found that it might be useful to share some of the conversation points that him and I had in terms of aligning insurance coverage to both properly make sure that the coverage that the landlord policy will provide is acceptable and going to protect you from risk, but also to make sure that it's not going to become so expensive that it potentially makes the rentals, not competitive in terms of like monthly rent for a tenant. So um, just to give you guys a little bit of background, I have a pretty informal process on going through some of the content that I think will be useful to you guys. But I do think it's important that the information that you guys are getting is also coming from somebody that is competent and knows what they're talking about, so that if you have follow-up questions, you feel comfortable asking them to me, and I can be a good resource to you guys. Greg, I just got your, no, I'll turn my camera on. And I have some content to share here too, but let me know if this kicks the camera on.
Oh, would you like me to have your screen shared?
Yeah, that would be great if you guys don't mind.
Okay.
Yeah, here, let me share my screen with you.
Okay. I'll make you the presenter so that you can share your screen.
Okay.
All right.
Sounds good. All right. Let me know if you guys can see that.
So you can see it.
Alrighty, sounds good. So you're gonna have a little fourth wall break. I keep notes on here, so that might be useful to you guys to see as we go along. But where I left off, just wanted to give you guys a little bit of my background so that you understand kind of where I come from, what my philosophy is as far as insurance is concerned, and then how I can help you guys in the best way. So just a part of the bio that I sent over. I've been with Liberty Mutual Insurance since 2014. I started with American Family Insurance about 3 years prior to that, right out of high school, starting a scratch insurance agency. Ultimately, as my career sort of developed and I was pursuing my undergrad, I kept continuously losing what we would consider at my prior insurance carrier to be our best insurance clients to this company called Liberty Mutual. Eventually, I started to become curious and asked, who is this company, Liberty Mutual? And upon further investigation, I found that they were a company that prefers what they would consider A-rated clients, which by insurance definition, that means relatively low risk, multi policy owners, generally insureds that are married or have multiple people, and they also cater towards business line products, which can be either landlord or business pursuits like commercial lines policies for a multitude of different products in that format. So all this to say, I was extremely impressed with the way that Liberty Mutual conducted their business. And I walked into the local office at the time and basically ask them, what opportunities do you guys have, because I want to be a part of your company. My manager hired me as an intern while I was completing my undergrad in risk management and insurance from Missouri State University. And then upon completion, I started my business there in Springfield, Missouri, where I graduated from. So my wife and I are originally from the Chicagoland area. She grew up in Vernon Hills. I grew up in Antioch. So we, after about a year and a half of living in Missouri, had a chance to move back here, and I restarted my business. And we've been working here out of the Illinois area for about the last 3 years. And as a result, we're a top 10 insurance agency in the Midwest, top 100 in our company overall out of 3,800. So we are a very high producing agency. There's very few scenarios that we have not seen or dealt with on multiple occasions over the course of the last several years. And we love working with people, especially investors, because your guys' world is constantly changing. It's very quick. You guys need answers with accuracy and detail very quickly. And so it's an opportunity for us to stay on our toes and make sure that we're delivering a good service. So I think that's most of my background. But as far as just topic points, in case this is useful to anybody on this call, because of the volume of business that me and my team conduct, we're licensed in, I think it's 9 states at this point. So right now we work in Illinois as our primary state. We also do Wisconsin, Indiana, Missouri, Iowa, Michigan, Ohio, Missouri, Arkansas, Kansas, Oklahoma, Texas, and California. So if you guys run into a scenario where you're purchasing property outside of those states, I also work with many of the top agents around the company and can point you in the right direction if I can't help. So before I get into the next piece, like I said, I'm leaving this pretty open format. Does anybody have any questions, anything off the bat that you would like me to answer, or specific pieces in my presentation that you want me to address? And if not, it's okay. I'm happy to just share. All right. So the content that I'm going to be sharing today is my experience with long-term rental properties. They don't necessarily have to be long-term rentals, but basically what a long-term rental policy by insurance definition is a property that is mainly being used as an income stream, that is not being lived in primarily and being sourced out to tenants to live in that primary home, or to live in that home long-term. So these policies are pretty similar to home insurance policies. Specifically with Liberty Mutual, we're writing our long-term rental properties on what we call an HO3 policy form. An HO3 policy is basically what, you might have a single family homeowner, or your standard home insurance policy for, any typical homeowner. It just has a limited scope of what is physically covered, because, you don't need as much coverage or as broad of coverage on a house that you're not primarily living in. So before I go any further, I don't know if many of you guys are going to be jumping on this call from your cell phone, but in case any of you are on your computer, feel free to grab that QR code. And then also that phone number is my cell phone. It's the easiest line of communication with me. If at any point, and even during the course of this presentation, if you guys have questions or just want to connect with me, or have me help with any scenarios that you're currently working on, those are going to be the best ways to get a hold of me. And you can call me, text me, or email me. All the email information is there in the QR code, and I can email that out to you guys as well. So I put some information in here about basically what a long-term rental policy is, what it does, how it works. This is all from the Insurance Information Institute. There's a lot of jargon in here, which I don't have to read through directly, but some of the key points that I would highlight is a long-term rental policy by nature is going to be typically used for physical damage that's caused to a property as a result of what we call a peril. So your obvious perils are going to be fire, vandalism, theft, wind, hail strikes, lightning, falling objects, which is like a tree falls on the house, in case I didn't mention that. It also is used for liability claims. So let's just say, one of your guys' responsibilities is to make sure that there's no ice on the sidewalk, and the mailman is coming up to deliver a package and he slips and he breaks his leg and he decides to sue you as an owner of the property. There is liability exposure when anybody is coming onto your property and decides to hold you accountable due to being the homeowner. And liability is a big portion of the protection that's afforded to you as a result of having a home insurance policy. So there's many different types of home insurance policies. The contracts that I'm going to be talking about today are specific to Liberty Mutual. We also write through 11 different insurance carriers. So in the event that Liberty is not competitive, there are other places that we can place risk to make sure that, you're getting an affordable price and that you're, getting a good policy. But most of what I'll be covering relates to Liberty Mutual products. And the big one that I try to focus on, and one of the endorsements I'll share here in a minute, is that in the event that you have a claim that deems your home unlivable and your tenants need to stay in an apartment or rent a hotel room during the time that we go in and rebuild the roof or, fix a fire damage claims or whatever, there's the possibility that you could be faced with lost rent and income as a result of those tenants no longer being able to pay because they're not physically living at that location anymore. And in insurance policies by Liberty Mutual and a couple other carriers too, they will cover you for lost rent as well as vacancies during a time period where a claim is built in, as long as you ask for it. It's not always included on every policy, so that's one thing that I'll share with you guys here in a little bit. And then lastly on this slide, the landlord policies by nature are going to cover the structure of the home itself. So if it's a home, it's going to cover the outside structure, including the roof and the windows. And sometimes it'll cover the interior portions that are not removable, such as, your plumbing, your HVAC systems, your toilets, cabinets, countertops, etc. It just does not cover personal contents, typically because your renters are going to be moving into the house with their own stuff. So the point on this slide is, if you are going to have renters in your home that are bringing their own furnishings, it's really important that you recommend to them, or even enforce that they maintain some form of renter's insurance. That way, in the event of a claim, your insurance company will go in and fix the building. Their insurance can go in and pay for their rented belongings, and then everybody is copacetic and happy. And we also write renter's insurance. So even if you have a new renter and they don't know where to go, just say, hey, we have a local guy in the area. He'll run you a quote. He'll be happy to help. So I grabbed this slide off of your guys' main website. So my understanding is in this group, one of the pillars that you guys try to cater your business practices to is to work smart, to move quickly, and to be able to find freedom through the market as a result of adding different properties to your portfolio. And I would say that the reason I included this is this aligns pretty quickly to how me and my team, as well as Liberty Mutual in general, do try to fit the same business practice so that we're all working together at the same goal. The big thing that you run into when you're purchasing insurance from an insurance carrier, or more importantly, from an insurance agent, is that every insurance agent has their own way of doing business, and some of them are better than others. So you can, in theory, purchase a policy online if you're really well versed with what you need for an insurance policy. But generally, when you work with somebody that you trust, they're going to make it a lot easier for you to make smart decisions and in a much more expedited fashion, so that you can close on properties make sure that you're protected, and then also obviously make sure that you're getting the most competitive rate. So this is the main topic that I wanted to cover with you guys today. So what you're looking at here is a base policy for what you would consider a typical home insurance property here in the Chicagoland area. There's a lot of information on this screen. Obviously, I don't plan to go through each one of them because I don't think that they're all relevant to you. But the point and what I'm trying to show you here is with an insurance policy, there's a lot of flexibility. There's a lot of options that you can consider, and each of them have pros and cons. And so, you know, there's a few of them that are really relevant to what a landlord will be looking for in setting up their policy. But I just want to make as close to, well, I want to make as close to a serious statement as I can by saying, as you go through closings, I know it's important to get the insurance box checked off, and most people don't want to deal with their insurance, but this part of the process can, in the event that you have a claim, be a lifesaver, or it can break a property. So you want to make sure that either you're working with somebody really good or that you know what you're asking for to make sure that you're getting what you need. So that being said, the areas that I want to educate you guys on today, specific to single family dwelling or multifamily dwellings up to 4 households, is an area in here called roof loss settlement type. The easy way to ask for this when you go to get an insurance quote is you want to ask, how is a roof going to be paid out in the event that I have hail damage or wind loss and I need to have my roof replaced? And in the insurance world, there's 2 options. One is what they call actual cash value. Basically, another word for that is garage sale value. And the other one is called replacement cost. So it's actual cash value and replacement cost. You're going to want to ask for replacement cost every single time. For people that don't know what the difference is, let's just say you have a roof that's 15 years old. And if you had to replace that roof, it would cost $20,000. If you purchase actual cash value coverage, which is the actual value of what that roof is worth right now, a $20,000 roof that's 15 years old is not going to be worth $20,000. It might be worth $5,000, $6,000. So in the event that you purchase actual cash value and then you go to replace your roof, what an insurance company is going to do is they're going to say, okay, well, you know, we see your $20,000 roof. We think that it has a value of about, I don't know, maybe 20, 30%. So we think it's worth about $5,000. We see that you have a $2,000 deductible. So we're going to give you the payout minus what your deductible is. So you're going to be getting $3,000 from your insurance company to replace a $20,000 roof, which sucks. Nobody wants to do that. Versus some insurance companies will allow you to purchase replacement cost coverage. Liberty Mutual is one of those carriers. It is an additional amount of premium. It's a little bit more expensive to do it that way, but obviously with the math that I explained, it can make pretty good sense why it's useful. And if it's going to add an extra, you know, $15, $20 a month to your premium, typically it's not that much, but what the cost is going to be, it is extremely useful and important that you ask for that. If the insurance company says that they cannot do it, I would recommend going to somebody else. The second piece is right here, coverage D. That's called loss of use coverage. The loss of use coverage is what I had mentioned before that illustrates lost rent due to a claim. So as a rule of thumb, we recommend that you take the amount of money that you're receiving on rent on every single or on each or on a specific property that you're going to be insuring and multiply that amount by 12. So you want the loss of use coverage to be basically 1 year's rent of the property that you're protecting. And if you do that, in the event that you have a very severe claim and you have to have the entire home completely destroyed down to its foundation and then build back up to make sure it's safe, basically you're buying yourself a year's worth of time to be able to make that rebuild happen without losing money as a result of not having rent. And this coverage too, like loss of use coverage from an insurance standpoint is minimal. I mean, if we take loss of use coverage at $34,000 and let's just say we up it to $100,000, the premium difference might be a couple of dollars a month. So these line items of coverage really do not get paid out very often. And as a result, the cost to increase them is pretty small. Same exact thing happens here with premises liability. This is the example I used. If somebody falls on your property or gets hurt and they decide to sue you as a landlord, the liability protection ranges anywhere from $100,000 all the way up to $1 million. If it's my policy, I would up that to $1 million right off the bat. Again, premium difference is going to be maybe a couple dollars a month, but in the event that you have a really catastrophic claim and somebody decides to sue you, you're going to be protected. There's pieces where you can incorporate the business or the property to like an LLC that'll protect you from liability claims that obviously we can, address if anybody has further questions on that. But regardless, even if you're not personally being held liable due to the events that happen at your property, it's still really low risk to increase that to $1 million and not put yourself financially in a challenging position. Deductible, I don't know how much you guys want me to cover on this. Deductibles basically work by saying the higher your deductible is, the lower your insurance premium is going to be, and then obviously vice versa. Some insurance companies, just as an example, there's a very large insurance company here in Illinois and across the country that's colors are red and white, that like a certain Packers player, that automatically will include a 1% deductible for all properties. There's some properties that they will include like a 0.5% deductible, but that's something that you want to make sure that you're assessing during the time period that you're purchasing a policy, because if you have to go and file a claim, you realize that your $500,000 house has a 1% deductible and you have to pay $5,000 in order for them to step up and help you. That's not a bad thing as long as you're aware of it. But it can be avoidable if you purchase a company that has a lower deductible option. So deductible is important. And then there's other like miscellaneous coverages in here. Obviously, there's discounts associated with bundling that can help your premium. I can spend some more time talking about options that'll help reduce your cost without exposing you to too much risk. But the last little factors that I wanted to cover on here relate to water damage, home sharing if you're using a property for like an Airbnb or some type of short-term rental, and then service line coverage. So really quickly, home sharing for short-term basis rental options are sometimes covered with insurance companies. Sometimes they are not. You are going to want to ask to make sure that they are, if those are scenarios that you guys are facing. In the event that you do have a short-term rental, you just have to make sure that you add on the home sharing option to make sure that you're not being exposed to any extra risk. The difference between a long-term rental and a short-term rental is naturally different for an insurance company. The longer a renter is in a certain property, the less chances that claims are going to be filed because there's fewer frequencies of people not being used to the home and knowing how to take care of it. So that's a big one. Make sure you're asking for short-term basis coverage if they don't offer it. Service line coverage is basically everything that has service lines running from the house out to the city or let's just say like some, or not some pumps, but like leach fields for septic tanks, etc. Typical insurance policies will not cover the lines outside of the home. Sometimes they're covered by the city, but there's a little bit of a gray area in there, and you can add service line coverage to a policy and the premium is pretty minimal. Same thing, one of the other exclusions that typical home insurance policies provide is water damage that is due to water coming up from your sewer or drainage systems. So if you're purchasing a property that has a sump pump, it's a good idea to make sure that you're adding sump pump protection coverage or water backup coverage so that if any of those drains get clogged or if there's a reverse flow of water pressure and it starts to come up through the property, that the damage due to that water will be covered. And then from a policy perspective, that is the content of the endorsements that I wanted to go over. I think this is a pretty good pause point because there's a lot of information that I just covered. So at this point, does anybody have any questions that I can address before I go on to the next piece? I'll check
Yes,
to, yeah.
feel free to unmute yourself if you have questions, guys.
So there are 2 items that you are to ask for. Is that correct?
Yes.
The sump
Yep, go
pump,
ahead.
the deductible. Are those 2 items that you need to ask about?
So I would recommend when you're purchasing an insurance policy to have your insurance agent go through all of the coverages, just to make sure that you're understanding your policy. And in the event that something happens to the property, you know how to use your insurance to have the insurance pay out. But during the course of that, I guess, educational series, the coverages that you're going to want to specifically ask for if they do not mention it are going to be, how is the roof going to be replaced in the event that I have a claim? Is it actual cash value or is it at replacement costs? You're going to want to ask, what is your liability coverage? If they're quoting you $100,000 and somebody gets hurt and you're only going to pay out $100,000, that's pretty small in the event of a claim. So you're going to want to make sure that you have large limits of liability. And then I would also ask about, I mean, it depends on the property. So if there's a sump pump, I would ask how water damage in the basement is covered or if it's covered, as well as if it's a short-term basis property, like you're renting to an Airbnb or a couple of weekends a year, is that covered? And then just in general, I know that this is a lot of information for your question, but I would really encourage each of you as you're purchasing a property insurance policy to make sure that your agent is educating you on each of the coverages because they're all important.
Mm-hmm.
Yeah.
Okay, thanks.
Mm-hmm.
Okay, so how long would it take to get a quote for we're just gonna do a flip and say 6 months?
Yeah, it's a good question. So here's what the process for the insurance looks like to physically quote the policy and then issue it for a closing, or even like if you have already own the property but you're renewing it. If your agent is available, and Pete, like for my team, we're typically available from 8 o'clock until 6. It typically takes maybe an hour or two to put together a quote. Sometimes it can be as quick as 5-10 minutes. But if it's a little bit more involved, like if it's a home that's built in the 1800s or is over 100 years old, sometimes it can take a little bit longer. But it typically takes, I'd say on average, about 20 minutes, but as long as an hour. And then from there, to issue the policy, it only takes about 5 minutes additional. So you could go start to finish if it's a pretty straightforward policy, I'd say in probably less than 20 minutes. And most of it can be done online too. Yeah.
Yeah, so we just need a quote and then give that to the lender, and then it wouldn't come into effect until we found out the closing date. That wouldn't be a problem?
Right.
Okay.
Nope. So here's how the closing works. Me and my team, we typically do anywhere from 8 to 15 of these a week. So we're pretty good at making sure that the closing process fits pretty easily as far as the insurance is concerned. So here's how the insurance works as far as closing is concerned. About a week to 2 weeks before your closing, your lender is going to want a copy of your home insurance policy. So that way they can complete their debt to income ratios and make sure that you're not over borrowing, and that they can basically start to prepare the closing paperwork for when you physically close. So how the insurance works in that scenario is you're going to want to get an insurance quote, make sure it's a good fit, and then ask your insurance agent to send a copy either of the policy binder or of a quote either over to you or to the lender directly. My team and I, we just ask if you say, yep, this quote looks good, let's go ahead and green light it. We just ask for your lender's contact information, and then your lender and your insurance agent will coordinate the insurance for your closing. And then ultimately when the property closes, if you're paying for the home insurance through escrow, they'll cut us a check at the time of closing.
Okay.
So, yeah, the relationship between your lender and your insurance agent when the time is appropriate becomes pretty critical. So that's like the
Okay.
easiest part of the process, but it can be one of the reasons why a closing can be delayed or, not go through smoothly.
Right. Okay. Thank you.
Yeah. Mm-hmm.
I have a question.
Yeah.
Okay, so how much personal liability protection do you need for a rental property?
I mean, I would say no less than $500,000. Your typical insurance agent's going to say you'd be fine at $300,000. I think that it all comes down to how big the price difference is. Like if you went from $300,000 up to $500,000 and it doubles your rate, it might not be necessary for you to have to expose yourself to that much premium. But in this case, to go from 500,000 to from 300,000 to 500,000, it might only add like $20 or $30 a year. So if you were asking me personally, I recommend $1 million. If somebody says, I don't need $1 million, I want less, you're going to have to fight me a little bit to go less than 500,000.
Okay. And so then I have a second question for you. So how are the insurance wait a minute. How are the insurance rates calculated for
Yeah.
a rental property?
Yeah, that's a great question. So the price that's associated to a certain property varies based on a lot of different factors. Each risk has its own unique characteristics, and you're not going to be able to get the same price if you quote two homes identically. So the answer to your question is the location that the home is in makes a big impact. Obviously, the size and the characteristics of the home. Those factors help us determine how much we need to insure a home for. So there's a separate conversation that we could have about how to properly insure a home at the right value, because I think that that's important too. But the replacement cost of the home, the location that the house is in, and then the biggest factor that affects the pricing on a home insurance policy or a rental property is how old the roof is. So if you're looking at a property and the roof is older than 20 years or older than 25 years, your insurance premium is going to be relatively high. If you have a home that's got a roof that's within 10 years, it's going to be pretty competitive. If it's within 5 years, you're going to be really competitive.
Okay. And
Insurance,
then I have
go ahead.
And then I have one final question. So I know that sometimes, people tell you to get flood insurance, or if you get fire insurance, or if a tornado comes and knock your roof off. So under a standard policy for the home, is that not covered in there, or is that something additional that you have to pay for just in case there's a flood or there's a fire or there's a storm and the hail knocked off the roof?
Yeah, that's a good question. So flood insurance is not covered by any home insurance policy as a standard option. The same applies for earthquakes. So any type of land movement and rising water from nearby lakes, rivers, ponds, or like obviously oceans as well, those are excluded on home insurance policies. So then your question there being, well, is it something that I should purchase? The answer is that you can purchase it. It's issued through private insurance companies like Liberty Mutual. It's also issued through FEMA, which is the flood insurance program issued through the federal government. So to your question, is it necessary to purchase? And the answer is it depends on where the house is. So oftentimes when you go to file an application for a mortgage when you're purchasing a property, the FEMA has mapped the entire United States to tell you whether or not your property is in a flood zone. And oftentimes they'll tell you, hey, you need a flood insurance policy to accompany this home insurance policy.
Mm-hmm.
The last time that Illinois, specifically the Chicagoland, had to face a scenario where we had flooding to the point where it raised the water levels enough to really affect inland areas was, I don't even remember. I think there was a scenario like close to 100 years ago, but that was mainly caused by earthquakes in the area that actually reversed the flow of the Mississippi River. So we see it pretty infrequently in this area unless your house is like hanging on a cliff by Lake Michigan. So there are some other examples like further south it can be relevant, but I think if your question is it a good idea to carry that coverage even if it's not being required by my lender? And I think that the answer is I feel comfortable not including it, but if you do choose to include it, those policies typically are not very expensive. They can range anywhere from $200 a year to probably $500 a year.
Okay. Thank you.
Yeah.
Hey, Colin, I have a question. This is Jeanette.
Hey, Jeanette, how are you?
I'm fine. My question is, like, for instance, let's say the roof. Actually, I have two questions. The first one is you talk about that the rate, it's based on the roof of the property. Well, what if you're renovating it and then now you've added the expenses, the roof, and you put on a new roof? Does that change your insurance now? Because if you were getting charged a lot before. And my second question is, does whoever owned the property before had a lot of claim, does that also affect your rates?
That's a great question. So, and just make sure I got the second one right. So you're saying if the prior insurance owner or the prior property owner had claims, does that affect your pricing when you go to purchase that home?
Yes, correct. Mm-hmm.
Okay, perfect. So here's the answer to your question. If you replace the roof during the time period that you're owning it, let's just say midway through the policy, like say, you purchased the home in December and you paid for the insurance for the entire year. And then in July, you put a brand new roof on it. So insurance companies are all different in this respect. It's specific to Liberty Mutual and most of the insurance carriers. You can add the new roof discount at any point during your policy period. So, and by the way, it goes the same way with any of these endorsements too. So all of these endorsements are changeable and flexible at any point during your policy. So like, say, for example, you are renting to a really good family. They've got no issues. You have $500,000 worth of liability coverage and you feel really good about it. And then a week later, you have some college kids that move in. You are worried about them. You think that one of them's going to fall off your driveway and get hurt and sue you. And you want to kick that up to $1 million just to make you feel safe. You can do that. You can do that from the app, the Liberty Mutual app. But all this to say, you can make adjustments to your policy at any point. And in the event that you add a new roof midterm or whatever time period, the amount that you overpaid into that policy will be credited back to you in the form of a refund. So if you paid $1,200 a year adding the new roof brings you down to $800. They're going to pay you the difference in the form of a refund check. So that's the first question's answer. Second question is, does the claims from a prior owner affect your insurance pricing? And the answer is no, but it is important to ask your insurance agent if there are prior claims on the property. So again, insurance carriers are different. So like for example, Liberty Mutual allows me to see claims on the property up to 5 years prior to today's date. So if you're purchasing a property and I run a claims history report and I see that there's 5 claims for water backup, the answer to your question is no, those are not going to affect your pricing at all because you were not the person that claimed it. But it is a pretty good indication that, hey, we should probably add water backup to this property. So another question I usually get along the same line is, let's just say you've got 10 long-term rentals. If you file a claim on one property, is that going to affect the pricing on all of your other properties? Or say you have a primary home and you file a claim on your home, is that going to affect the pricing of all of your other subsequent properties as well? And the answer to that is it depends on the insurance carrier. With Liberty Mutual, the claim that you file is only attached to that physical location. So you could have as many claims, like if you've got 20 different properties and you got 20 different claims out there and each one of those claims is just attached to one single property, there's going to be no adverse pricing due to the other properties as a result of filing that claim. A long-winded answer, but it was a really good question. Hopefully that answers it for you.
Thank you. Yes, it does.
You bet.
Hi, Colin, can you hear me?
I can hear you.
Great. Hey, I have a question. It's not so much asking about property insurance, but a lot of us, we are rehabbing properties. Some towns require general contractor. And my question is, what's the requirement to get insurance for a general contractor for us to hire subs? We're not physically doing the work, we're just kind of just organizing it. What's required and what the cost runs?
That's a good question. So the general contractor's insurance is technically a commercial lines product, and it's not typically covered by your standard home insurance policy. So as a result, you have to set up its own separate coverage for the short-term period while the work is being completed. That is an area where me and my team do not specifically work on short-term business lines policies. Liberty Mutual does have a team that offers that type of product, but I don't really know what the pricing is, and I could probably do a little deep dive on it to try to get you some more info. That way, at least you have some help. But I don't know, unfortunately.
Okay, not a problem. My second question is, I heard someone talk about flood insurance. If you have a property in a flood zone, roughly, and I'm just catching you off guard, how much additional are we looking at just for that policy alone?
Yep, it's a good question. And the answer is it depends. I would say, so I don't want to give you a vague answer, so I'll try not to, but don't be upset with me if I don't give you a concise one. So there's two different types of policies that you can purchase for flood insurance. One is through the federal government, and one is through private flood insurance companies like Palomar Insurance and Neptune Insurance. All they do is flood insurance. Depending on the address and the risk that's associated to that address based on its, like elevation certificate or prior claims in the area, the pricing can vary dramatically. I've had some properties that are as low as $100 a year. I've had some policies that are $5,000 a year. So if the property that you're looking at is here in the Illinois area or like most of the surrounding states, again, don't quote me to this, but I would say your typical home insurance increase is going to be maybe between $300 and $500. could be as low as 250 is probably the average, like in a very rural, higher elevation, non-risk area. But it can really depend.
When you said 3 or 500, are you speaking of per year?
Per year. Yeah, I'm sorry.
Oh, okay, cool. All right, that's not bad. All right, thank you. I
Yeah.
appreciate it.
Yeah, no problem. I do the flood insurance piece because we do run into these for closings where flood insurance can really be a deal breaker on closings from time to time. Most insurance carriers have the ability to write flood insurance policies through FEMA. FEMA, because it's run by the federal government, can be really challenging to work with. No political affiliation aside, like they are just generally challenging to work with. So it can be slow to work with them, and sometimes their pricing is good, sometimes their pricing is bad. So the point that I'm ultimately trying to make is the ability for an insurance agent to be able to write through numerous different flood insurance carriers can be really critical. And it's not well advertised which one of those agents have the ability to do that. Not to like keep funneling attention to my team and I, but just using our team as an example, like we write through 4 different insurance carriers specific to flood, one of those being FEMA. So you just want to make sure that if an insurance agent goes, yep, we're going to put this through FEMA, it's $1,200 a year, good luck, what's your routing and account number? You do have the ability to give a little bit of pushback in those scenarios.
Yeah, that was my follow-up question. Is it better off to go to a private company as opposed to the government, FEMA, as
It depends.
far as rates?
Yeah. It's it just depends. It's very rare that the premiums are about the same. There's not necessarily rhyme or reason why FEMA is better on some properties than others, but honestly, it just depends on the address and the zip code that it's in.
Well, thank you. I appreciate it.
Yeah.
All right, Colin, I have another question.
Sure.
Okay, so I'm going back to storms and damages against properties. So my question is, when you place your claim at the insurance company, are they paying you the market value of what the property is worth, or is it just like a replacement cost of whatever the damage was?
Yep. So it's going to be the replacement cost of the damage to fix everything brand new up to whatever your policy limit is. And then not to make this any more complicated, but it's also less your deductible. So the example there being is, like, let's just use this house for an example. So this insurance policy, we estimated during the time that we were quoting the insurance that we think that we can rebuild the home if it was completely destroyed for $341,900. So in the event that you file a claim, if this house is like, let's just say a 2-story, 2,000 square foot home, if we go in and rebuild the home and to build the exact same house, it only costs us $250,000. We're only going to pay $250,000. But if this home is underinsured, like say this is a 4,000 square foot house and we have it insured for 341,000, and if it actually costs 500,000 for us to replace it, we're only going to pay up to 341,000.
Okay.
Yeah.
All right. So what about the like the personal property that was damaged inside of the property itself? So
Yep.
would they so would it still be a replacement cost, or would they do an actual cash value on property? And when I say property, just say it was, things inside the house. Just say your TV got destroyed. If the roof came off and it rained and it destroyed all the furniture and everything in the house. That's what I mean when I say personal property.
Yeah. So that's a good question. And the answer is it can go either way. So you can choose, like right here, for example, it shows personal property replacement cost, and this is a yes/no question. So if you choose that you want it to be insured at replacement cost, then you would just specify yes for that line. It's a little bit more expensive, but naturally what you're getting in in the way of your payout is going to be greater. So typically on long-term rentals, if the home is not furnished and you're expecting your tenants to bring all of their own contents into the home, then you could get away with the personal property replacement cost as being no. But then again, like if you're only going to add an extra $3 or $4 a month to add replacement cost contents, then choosing yes to that is not a bad choice.
Okay. Now I want to move over to something else. I don't think I heard you mention this one here. So the policy, would it cover if someone is injured on your property? Just say it snowed outside and you forgot to shovel, or you didn't put salt down and they fell and broke their leg. How would that work with the policy?
Yep, so it's a good question. Yeah, so the insurance policy is not immediately going to pay out to whoever the claimant is. The insurance policy is only going to pay out if that party decides to sue you as a result of being the homeowner. So it's based on if you have a suit brought to you. In the event that they do bring you a lawsuit and they say, hey, look, he broke his leg, he was an athlete, we suspect that he's going to need 8 months of rehab and yada, yada, yada. And they estimate that in order for that claimant to be put back into a place that they were at prior to getting hurt on your property, say they say it's going to cost $100,000, then in that scenario, your insurance company is going to basically cut a check to the claimant for the amount without having to get a deductible paid by you or anything like that. But to your question, that's covered by personal liability or premises liability.
Yes, personal liability. Okay.
Yeah.
And then I have one final question, I promise everyone.
Sure.
So what are there any discounts that can decrease your insurance rate, such as like if you have a home and an auto policy together, any like additional discounts with the insurance policy?
Yes. So here are the discounts that affect the pricing on the insurance. So your multi-policy discount is probably going to be the largest of them. Multi-policy being that you have typically your auto insurance with, like, let's just, Liberty Mutual is an easy example. So if you bring your insurance for the car over here to Liberty, that's going to give you the largest discount. You will also get a discount if you have a primary home insurance policy with us as well. There's also discounts for if there's security devices in the house, like if you have a Nest device or cameras or even sprinkler systems or fire alarms. Those can provide discounts. And then there's other smaller ones like claims-free discounts and how you prefer to make your payments. Like if you're paying for the insurance yourself, there's usually a discount if you pay for it in full versus if you do monthly. It's not always the case on long-term rentals. Like typically the monthly payments going to break down annually to the same as if you paid it in full. But those are the big discounts. Definitely the multi-policy is the biggest one.
The multi-policy. Okay, thank you very much. I really appreciate you answering all of those questions for me.
No problem at all. What other questions do we have?
Okay, this is Jeanette again. Could you explain a little bit about the umbrella policy and how does that work?
Yes, I'm happy to. So here's what an umbrella policy is and what it does. So in any insurance policy, they have a limit that they are going to cover you for in the event that somebody sues you. So in this quotes example, we're going to protect this client up to $300,000 worth of liability expenses. So say somebody comes onto the property and they decide to sue you for $1 million, then in that scenario, you're left with a $700,000 difference. And the question is, where is that difference going to come from? Who's going to pick up that bill? And the answer is, if you do not have additional liability protection, you are going to have to pay that bill. Or you can purchase what's called an umbrella policy, which is an extension of your liability limits across every insurance policy that you have. So the typical amount of additional protection is $1 million, but they can go up to whatever amount of coverage that you want. So like in this example, let's just say you had your auto insurance and your home insurance here, and you've got your auto insurance protects you up to $250,000 per accident, and your home insurance policy protects you up to, in this case, $300,000. If you add an additional $1 million worth of liability protection, technically you're driving around with $1.25 million worth of coverage on your auto and $1.3 million on your home insurance. So it's basically a big safety net in the event that you do have large assets and you feel like if somebody were to sue you, an attorney is going to look at your asset sheet and say, hey, this person's got a lot that we can take. We want to try to sue them and get as much out of them as we can. If you have a large amount of assets, ideally you want to have a large amount of liability coverage, and an umbrella policy is a tremendous way to accomplish that. And they're cheap too. Like they're typically anywhere from like $200 a year for $1 million up to, depending on the risk, they can be, whatever you want to spend.
Okay, thank you for explaining that. That was good.
Yeah, no problem. I'm a big fan of the umbrella policies. I could spend a whole session on the value of those. But there's LLC incorporations that you can look at that do shield you personally from liability claims that are a good idea to maintain. I don't really know about like the tax benefits or anything like that, but purely from a liability standpoint, that's a good idea to separate your risk into its own separate, corporation.
Right. Thank you so much, Colin. So let's have one more question before we wrap up the webinar today.
Yeah.
Hi, I have a question.
Sure.
Colin, hi, this is Natalie. I joined kind of late, so if you already answered this question, then um, I'm sorry. But I have a property. It's vacant. It has fire damage, and I'm having a hard time getting a policy on it. Do you insure vacant properties?
That's a good question. So typically, no. The property by the underwriting rules say that that the property needs to be filled within 30 days of the policy physically starting. So that's the rule of thumb. There are some exclusions though.
Mm-hmm.
For example, if there's a property that we're insuring that is significantly undergoing renovations or repairs, then we, in some cases, can submit a policy that could protect it, and it allows 6 months for that property to be completed, and at the end of the 6 months, we'll send out an inspector to make sure that the work is done and then keep the policy in force. They're unique policies because obviously insurance companies don't want to take on high risk, and prior damaged homes can be higher risk. So they have to go through like an underwriting process that can take a little extra time. By extra time, I typically mean about a day. And then it'll say whether it's approvable or not.
So I need to be looking for like a high risk carrier, but I've looked around and a lot of them are saying they can't insure it.
Yeah, I mean, it's a good question. I would say, are you on the meeting from your cell phone, or are you on the computer?
I'm on desktop.
Okay, I was just gonna say, if you can see my screen, there's a QR code in there, and obviously my cell phone number too. Just scan that and shoot me an email or a text. And if you want me to look at it, there's a multitude of different options that I can try and see if I can help you with that a little bit further. But that's a pretty unique case, and I don't know if you're necessarily excluded from all carriers, and you might not have to go through a hazard insurance company to get coverage, but it just kind of depends on the extent of the damage and the risk that the company wants to take on at that time.
Okay. Yeah, I'll give you a call because I do have an umbrella policy, but it's in my personal name. I don't have an umbrella in the business.
Mm-hmm.
So it's like I don't think that just because I have it in my personal, it would not cover if anything happened, roll over to the business. I would have to separate um, a separate policy for a business umbrella.
Not necessarily, no. So the umbrella policies generally cover personal liability, meaning it covers you as an individual, not necessarily the business entity, but it just depends on who's writing the umbrella policy. Usually umbrella policies by nature are pretty forgiving and they can cover LLCs as well as personal insurance. So that would be like you and your car and your home, etc.
Okay,
So,
okay.
yeah.
Okay, I'll go further into it when I give you a call, but thank you for very much for answering.
Yeah, no problem at all.
Okay.
If anybody else has any questions or if things come up or, you know, if you have certain properties that you want me to look at, like I said, all my contact information will be really easy to get a hold of me. We call, text, email, and try to be pretty diligent, at least in communicating quickly. So, trying to think. Last little plug, if you guys don't mind. The team that I work on, we are very ambitious because our team is growing very quickly, and we are working. One of our 5-year goals is to become a top insurance agency in the state, and we're doing pretty well at achieving it. And the only way that we're able to grow further to be able to meet our goal is through referrals. If we do a good policy review or submission for a customer and our name gets passed around one positive experience at a time, or more importantly, we partner with a lot of people in the real estate field, mainly mortgage lenders. So if there's any mortgage lenders, realtors that you guys really have a phenomenal experience with and you think that they might be a good introduction for us to partner with as well, I would greatly appreciate, you know, any names of people that you guys have great experiences with, because, you know, great people like to work with other great people, and we like to consider ourselves more great. Not to be unmodest.
All right. So yeah, thank you so much, Colin. Everyone, just letting you know that Hugo actually has been working on with Colin in switching over his insurance policy over to Liberty Mutual together with the help of Colin. So I believe there are a number of properties already that are switched over to Liberty Mutual. So in behalf of Chicago DealVault, Hugo, and the Dealmakers team, we would like to say a huge thank you for giving us clear information and basic knowledge regarding insurance. It will help especially new investors on what to do, how to decide in terms of insurance, and who to reach out to. So again, thank you so much, Colin, and thanks everyone for attending tonight's webinar. Again, you can feel free to reach out to Colin to the phone number he provided. He's very responsive. We have always been asking questions to him, and he's very helpful, especially with the request on the changes that we are asking for the insurance codes that he has been sending us. So he's been great. Thank you so much, everyone. Thanks, Colin.
You bet. Thank you for having me, guys, and have a good week, and thank you again for your time.
Thank you.